This price action is an absolute disaster, right? You get this complete flat line. You get the best news we've ever had in this cycle, which is Grayscale winning the case, and then just a complete reversal back to where we were before. Why is this happening? Why was that a sell the news event? Why are we not going up to actually towards the top of the range right here? So I want to look at two things. The first one is global net liquidity, which drives the Bitcoin price, and then jobs data, which is going to drive central bank policy. That is the important thing to look at, in my opinion, and where we are in the current economic and Bitcoin cycle, because we're not in the expansion phase yet, which may just give us an idea of why this is happening. So I want to look at it in this video. This is a market update, and I'll leave timestamps down in the description. Grayscale won the case against the SEC. It's probably the best news we've heard for a very, very long time in terms of Bitcoin. So the court has now said that the SEC allowing futures ETFs and denying spot ETFs is absurd, and that should not happen. So for right now, the SEC may appeal. They may also find some other reason why they have to deny the spot ETFs. But let's just assume at this point that the ETFs are coming, and it's just a matter of when and not if. Probably next year, in my opinion. I don't think the deadlines, because we've got one in October, I don't think the SEC are going to hurry up about anything. I think they're going to drag their feet for as long as possible. So let's assume next year. Let's also assume that the market also thinks that and is priced this in more or less now, because we've got to sell the news event. So this is all priced in my opinion. The whole ETF thing is a big red herring at this point. It's the other things we have to worry about that are obviously way more important for the Bitcoin price right now. So the whole ETF thing, just put it to the back of your mind. That's my opinion on this, where we are right now. We're just right in the middle of the range. Oversold would be 20, overbought would be 30. We're right in the middle, and we are not in the expansion phase. We are in the accumulation phase for BTC, where we don't get buy the news, but we just get this choppy trade. This is where we are in the current cycle, and this news event has shown us that. Interesting that we're at the bottom of this range during this good news. So from here, things are precarious. We could come down to this point, or we could maybe with some central bank updates pump a little bit. From here, I just think the Bitcoin price is just kind of done what it was going to do for this year. Since January, we're up 60%, let's say. That's an amazing performance considering what's happening with jobs and the economy. So from here, every other cycle, during this part of the cycle, you've seen a good pump from the bottom, but then just a kind of sideways or choppy action. That's exactly what we're seeing again. I don't see any reason why we're going to break through the 30 level and reach new highs for here. So there is some volatility to trade. However, from here, we're kind of done for this year until central bank policy changes. So let's have a look at what will change that central bank policy. If you are a trader though, check out Bybit. You can get a deposit bonus up to 30K. Just make a deposit and trade. Check the link in the description for the details there. So I want to look at the two things that I think are going to drive Bitcoin prices over the next part of the cycle. One is global net liquidity, essentially central banks pushing in or pulling out liquidity from the banking system. This goes hand in hand with BTC. So I've done this many times, but you can see this is global net liquidity rising, and this is the price of Bitcoin rising. This is global net liquidity falling off, and this is the price of Bitcoin falling off. This is net liquidity rising, and this is Bitcoin rising, and this is net liquidity falling off, and this is Bitcoin falling off. They are intertwined. And so we can't predict what's going to happen to net liquidity. This is great to look at. This is on TradingView. Type in global net liquidity on TradingView. You can see it in your indicators right here. TradingView is free, so you can get this. I'll link TradingView in the description as well. It's totally free. But what is going to drive net liquidity back up? Well, it's economic weakness. Economic weakness, in my opinion, is not good news for BTC. Who is the marginal buyer of Bitcoin? It's the retail investor. It's you and I. What's happening to the economy? It's getting much weaker. Rates are still high. The job market is loosening. It's not great news for BTC. The inflection point is when that gets worse and bad enough that it becomes politically untenable to say we're still tightening. That hasn't come yet. That is going to come usually within around 6 months, 6 to 8 months of the last rate hike, which is around this time. So the next 6 to 8 months is a precarious situation where Bitcoin could go anywhere within this range, in my opinion. The opportunity is to invest through this part of the cycle. And then you get the Bitcoin halving, which usually reaches us up to new highs, not only because of the Bitcoin halving, but because eventually the economy gets weak enough where liquidity has to be injected again. That's going to drive BTC up. That's the cycle that we're playing, or at least I'm playing, and it's going to play out over the next 12 months and then 18 months. And so that's the part of the cycle that I want to be really focused on and seeing how weak we get during that time. Let's look at some jobs data as well, because all of the other stuff, in my opinion, that is going on is noise, and the signal is jobs. Because what the Fed really wants to control is supply and demand within wages. And so what they're really looking to do is chop up the jobs market a little bit, make it weaker, and make it impossible for us to demand higher wages, because that is the inflation that they're worried about. Goods inflation, CPI, that always comes down. Goods always come cheaper. When things get more expensive, people use different things. That always comes down. But the wages thing is what they want to destroy. So let's have a look at that. This is jobs, job openings. And you can see it's getting a lot weaker, which is good for the Fed. But in the short term, it's not very good for asset prices like Bitcoin, where the retail investor is the marginal buyer. You're seeing the jobs market get destroyed. Not great in the short term, but if this continues to get weak, the central bank policy can flip, which is ultimately bullish for BTC. So you just have to play this part of the cycle. Jobs data is getting weaker. It's still way too high. And so central banks aren't going to do anything when jobs data is still like this. ADP employment change, as well, as you can see, getting weaker, but certainly not, recessionary territory where central banks are going to flip. So weaker for right now. And then as we can see, this is the United States unemployment rate. Again, it's very, very low. This is now, employment is the last thing to go in an economic cycle. And you usually see it spike, and then when it does spike, central bank policy flips. We're not there yet. And so for right now, you're just seeing slight weakness in job openings, but the unemployment rate's still very low. So we've got a ways to go in this part of the cycle where interest rates are going to remain high, and the economy isn't weak enough yet for central banks to flip. And so Bitcoin is in this purgatory, this accumulation phase before the expansion. When unemployment ticks up, that's when you're going to get big central bank intervention, but it isn't happening yet. There is also another fact which is going to keep us within this purgatory, which is the Fed's balance sheet. So this is tied in with global net liquidity. Net liquidity increases when central banks start printing money to buy bonds from banks in order to take those bonds away from them to try and stimulate the banks into putting money elsewhere, either buying more bonds, and so the bond price rises and the yield falls, or to maybe take more risk in actually extending credit to businesses. That's not happening yet, as we can see. Quantitative tightening is happening. This was the pump in Bitcoin right here when the BTFP was announced, which is when they bailed out. It wasn't a taxpayer bailout, but it was a liquidity bailout for the banks. You can see that here. However, quantitative tightening is still happening, a reduction in the balance sheet. This is restrictive for global policy. And let's look at Bitcoin. Performed extremely well during this time. But there's only so far that speculation about the turn can drive us before we actually need the turn to happen, which drives us into the next part of the cycle. This will happen eventually, in my opinion, which is the bull case for BTC, because over the long term, as you can see, they just increase their balance sheet. But for right now, we're just in this restrictive phase for BTC right here, an opportunity for investors and an opportunity for day traders as well if you want to try and trade that volatility. But as you can see, sell the news events are still occurring. So we need some other piece of data to drive us in a direction. For now, I think the whole entire ETF thing needs to be put to the back of our minds. It's not something that's going to drive prices until we get the acceptances, which may be not until next year, in my opinion. October is the next decision date for the SEC to either approve, deny, or just delay the ETF applications. So there will be some volatility around those dates. However, in terms of central bank policy, this may not change for a while. So we're going to be in this purgatory, which is a choppy trade throughout this accumulation phase. And then next year for the halving, which is going to be a whole new narrative, which you may want to start trying to trade now, taking positions now for what might happen in 6 to 8 months time. So if you are a trader, you can check out Bybit. trade with me on there. Just make a deposit and trade. You can get up to 30K depending on how much you deposit. Link in description for those details. If you want to see my latest updates in the crypto investor course on my strategy for the next Bitcoin halving and my portfolio and how I'm investing, link below for the crypto investor course as well. I'm James, it's my ZG. Cheers for watching, and I'll see you in the next one.